Hi, I'm Lindsay Alexander, and this is mybanktracker.com. If you've been putting aside your extra cash into a savings account at a bank, you probably see that the balance isn't really growing much. These days, if you keep putting your money into a low-interest savings account, it's never going to amount to much more than you've already put in. If you want your money to grow, you need to invest it. And for many new investors, that means buying some stock. But what is stock exactly? Businesses will sometimes sell parts of that business to investors, which helps bring in more money for the company. The investors will pay a certain amount of money for each one. That part of the stock which was bought represents a partial ownership in the company. If the company does well and the value of the stock rises, investors can make money by selling them. But if the value of the stock goes down, then investors will lose money if they sell their stock at the time when it fell. But it can be fun and a great experience to buy one or two shares of stock in a company that you're most interested in. Most investors buy hundreds and sometimes thousands of shares of stock in numerous companies. Each share of stock represents ownership, but very few investors own enough in stock in any particular company to be able to influence the company's actions. Also, individual shareholders have a say on any concerns or issues in the company. They have the right to vote and address any matters on behalf of the company. Then there are stock portfolios. This refers to all the different companies in which an investor owns stock. Some investors choose to buy stock in a certain industry, such as alternative energy or telecommunications. Other investors will select their stock by researching numerous companies and try to predict which companies will be the most successful in the future, which will increase the value of the stock. There is another way to buy a number of stocks in a certain industry or type of market, which is to buy shares of a mutual fund. This is created by a professional money manager. A mutual fund is made up of many different stocks or more, which all have something in common. For example, they could all be from companies that are located in a certain region of the world. And when investing your money in buying a mutual fund, it's actually not that risky, because if one of the stocks in the mutual fund drops in value, there are many others that actually gain in value. However, there's no way to be able to predict the future and know which stocks will rise and fall. The only thing you should do is to hold on to the stock for a while, for a couple years or more, in order to make money. If you own many particular shares of stock, you can decide to sell some of them when their value rises and hold on to the rest and hope that their value will increase later. Shares of stock are bought and sold, or traded in the stock market. The stock market has very specific hours and many rules regulating its operation. This is because the price of the company's stock is tied to the company's performance, which could lead to insiders who have public information about the company's earnings or business plan, which is an unfair advantage when it comes to buying or selling their shares of stock. Investing can be a fun way to make some money. So next time you see your savings account isn't growing, just look into buying stock. This could lead to a successful new hobby. I'm Lindsay Alexander with mybanktracker.com, and together we're going to build your finances and rebuild the world.